Traders, welcome to the final episode of the Trading Psychology Mastery series. In this series, I'm going to share with you an overall foolproof wealth creation system for your trading. And we're going to talk about all the components that go around your trading to ensure that you can build sustainable money and get paid consistently by the markets. And you can sustain that. That's foolproof through prop firms going under, through you getting sick or having challenges that stop you from being able to make money from the markets. And if the markets don't provide opportunities, you have foolproof systems in place, okay? And you may have seen me suggest some things in some of my previous YouTube videos when you ask the question, why am I investing in an index fund that makes 7% per year when I can make 7% per day in my trading? And some trolls on the YouTube comments are asking or saying this guy's no idea what he's talking about. But the truth is, I just have a broader perspective than some of these traders. I've been doing this for the last 8 years plus, and I've seen many clients go through situations, and I've had situations myself where you can't actually trade anymore. You get sick, or you have medical challenges or medical issues, and you don't want to be left vulnerable to just your trading. And if you can't perform, or if the market doesn't provide opportunities, what do you do then? And these people haven't gone through what I've seen in traders' journeys and through my journey, where they're left vulnerable to the market, and now all of a sudden they don't have income coming in through the market. So it's important to put the action steps that I'm going to be sharing in this video in place with your trading if you want to consistently get paid in the long run, and you want to do this full time, and you want to do this properly. Okay, so I'm going to share with you a very broad perspective, and we're going to be talking firstly about some challenges you're probably unaware about with your trading and how we can put a foolproof system in place to manage and mitigate them. Okay, so let's start by doing this. Let's start by going in there and listing some of the drawbacks of being a trader and some of the limitations of being a trader and some of the risks of being a trader, so that we can ensure that each and every single one of you have become aware of these things and we can put a system in place to manage them. Now, some of the drawbacks and risks of being a trader is that your income, your very income, is now dependent on a probability, and I'm going to put in brackets here, uncertain model, and you're now at the mercy of the markets to have to make money. And if you have a family, if you have, dependents, then you don't really want your income, your livelihood at the hands of something that's uncertain or something that's probabilistic, something that's not even guaranteed. So that's one of the drawbacks of being a trader. Another drawback of being a trader is that it's dependent highly on your skill. So if you get sick, or I've had clients who've gotten pregnant, or clients who've had serious medical issues like strokes or amputations, I've seen this happen where they can no longer trade. So what do you do in those types of situations if you find yourself in a situation where you physically aren't in a situation to be able to trade? Or what happens if the market stops providing opportunity? That's another drawback. This happened to me when I first went full-time with my trading. I came off a few very, very strong months, and I went full-time with my trading. The market didn't provide any opportunities that aligned with my strategy for a couple months. Okay, that's a real risk you run as a trader. All right. What are some other risks you run as a trader? Well, you're dependent on certain technology, and maybe you have a prop firm funding, or maybe you have private investors. These are all individuals that you're now dependent on for income. And if the prop firm goes under, or if the private investor needs their money back, or if the technology provider stops providing technology for whatever reason, then you are now vulnerable to those particular things. Okay, these are real risks. These are real drawbacks of being a trader. All right. Now, I could keep listing more, but I think these are some good ones. It shows the uncertainties of being a trader. It shows the vulnerabilities of being a trader. So when I make these suggestions on the channel and I share some ideas that may go counter to what you think is the best option right now, it's because I've seen many traders go through many different scenarios, which you're probably not aware of, and I'm making suggestions based on what I believe is a foolproof system to sustainably make money as a trader and get paid as a trader, and to consistently have that in the future. Because chances are, although you think you want to make a lot of money now, chances are you want your trading to sustain over a long period of time, where you can consistently pull money from the markets and you can have more sustainability and more longevity in your trading. Okay. Now, although, putting your money in a cash account or in low cost index funds may not make you a huge amount of money now, if you want to be in this game for a long period of time, it can often pay dividends later in the future. All right, anyway, let's get into this. Now, what I want to share is an overall wealth creation system which will help mitigate these risks and put you in the best chances to consistently get paid as a trader. Now, we have to differentiate a few things. Firstly, above the line is income, which we can also call business, and below the line is personal finance and management of this income, which we call finance, right? Personal finance. Now, above the line, you've got two different ways to make income. You've got what is referred to as a positive sum income source. You've also got what is called a zero sum income source. Your trading will be a zero sum income source, which means if you win, someone else loses. If you lose, someone else wins. A positive sum income source will be some form of a job, part-time or a full-time job, also a service-based or product-based business where you go off and provide a product and service to someone else and you get paid in fair exchange. You go and give your time to an employee, you get paid in fair exchange. This is a win-win scenario. Positive sum, which is what those things are. Zero sum is lose-win. Someone wins, someone loses. Okay? It's important to understand the different types of income sources. Now, not all income is built the same. All income is built different. There's benefits and drawbacks to each of these forms of income. Obviously, everybody here is aware of the benefits of trading. Otherwise, you probably wouldn't be watching this YouTube channel. I just listed some of the drawbacks above. Some of the benefits of having a full-time job is you have financial security for the most part. And it's a lot less likely that you're going to lose that income. Although it's still possible, it's a lot less likely compared to something like trading or a business. Once you have a contract, once you have a good, stable job, you're most likely going to get paid every 2 weeks or every month. Okay? Now, the drawback of that is that you have to most likely go to work in an office space or a cubicle at a certain period of time, and it may not be all that inspiring to you. You may be helping someone else build their dreams as opposed to building your own dreams. Okay, so there are benefits and drawbacks to a job. A service-based business, there are some benefits to that. You can start to do what you love. You can start to have a scalable income where the more and more you provide a product or service, the more and more you get paid. Some of the drawbacks of that, however, is that you're running your own business, you're running your own show. It's a lot of work. You have to work long hours. You have to do things in the start that you probably don't want to do. Okay, so there are benefits and drawbacks each way. However, I've mentioned this in my other video on make so much money that they think you're a drug dealer, which is a good video to touch on after this, where there are the different sources of income, and you have a mobile, you got a non-mobile, you got mobile, you've got an active income, you've got semi-active or semi-passive, and then fully passive income. And really, ideally, the best form of money you're going to be making is passive mobile income, which we'll talk about how you can get to in a second. But a job is an active non-mobile income for the most part, unless you have some mobile capabilities with that. So a job you're going to have to be required in a certain place at a certain time. However, it's probably the lowest entry to barrier to actually get paid. Okay, and then you work your way up, and you have a mobile active income, which is maybe a small online business where you're working quite extensively, but you're now online. Okay, so most people would argue that's a better form of income. And then you can maybe go to trading, which is a semi-active mobile income, which is arguably better. However, it comes with its risks. And then long-term investments would be, an income-producing asset that pays a dividend would be a mobile passive income, where you automate that and it pays you a dividend every quarter. Now, the drawback of that is that it takes time to build something of any form of substance with that. But once you do build that through compound interest, you get some good results. Okay, so recognize that not all incomes are the same, but there are also benefits and drawbacks to each income. What I suggest, until you get your trading in a good place, or until you get your trading in a small business into a good place where it's generating enough money to cover what your job would have made, you continue to work a full-time or a part-time job. And then you grow your trading and your small business around that. And you focus more on managing your time and time management and delegation and proper structuring of your life to ensure that becomes a reality. But don't be leaving your job in a hurry or a rush because you hate it to then trade full time when you haven't proven that you can get results with your trading or with your small business. Okay, I would rather do the mindset work to feel more gratitude for your job and link your current job to your overall mission to help have a little bit of appreciation for it in the short term before you transition to full-time trading. I've covered that in other videos. Okay, now income, business, you want to have income coming in through your trading, through a part-time or a full-time job, and even potentially you'll eventually, if it's inspiring to you, open up a small business that, when you're a full-time trader, you'll probably have some time on your hands which you can dedicate to other income-producing businesses. Okay, now once that income comes in, right, now you have to manage it. Now, by the way, by diversifying and by having a part-time or a full-time job and having income through your small business, you've already started to manage and mitigate some of the risks, right? If, for example, your trading doesn't provide any opportunities for that month, or you have a small business, so you've got a job that's generating income for you. If the market stops providing opportunities, or the probability models aren't playing out in your favor, or the prop firm goes down, the investors leave, or the technology stops providing you data, then you have other income sources. You've got a part-time, full-time job, or you've got a small business that's generating income for you. Stay diversified, stay smart, okay? Now, once income comes into your bank account, we then talk about personal finance. Now, by the way, to increase your trading income, you scale with prop firms. To scale your small business, you scale traffic, you serve more clients and customers. To scale your job, although it's a little bit more difficult to do that, you show to your employer, your boss, how much value you're providing to the business, and you go above and beyond providing value to the business, and they're more likely to give you a bonus or a paycheck, a pay rise, right? But the limitations of a job, one of the drawbacks is it's a lot less scalable than trading in small businesses, okay? But you want to focus on continuing to scale your income. Now, whenever income comes in, this is what you want to do. You want to take a portion of that income and it goes into your bank account. You want to take a portion of that and you want to put it into a savings account. Cash savings that you don't touch, okay? Another portion goes into your taxes, okay? And then a portion of all the income goes into cash savings. Now, you want to save at least 10%, more than 10% of all the income. So if $1 comes in, you want to save 10 cents. 10 cents of every dollar goes into your cash savings, okay? Now, from your bank account, you also have your monthly expenses. And let's say, for example, your monthly expenses are $5,000 per month. And what you want to aim for is you want to aim to have at least a 6-month cash cushion. So $5,000 a month is your expenses. You times that by 6 months equals $30,000. So with these numbers, you want to have at least $30,000 cash in the bank as a cash cushion. So if, for example, you get sick or you get pregnant or you have some sort of a serious medical challenge, you have time. You have cash in the bank to give you time, to buy you time, so you can still cover your expenses. Okay? Now, remember this. We want to focus on, yes, generating more income in more efficient and effective ways, but you want to ultimately get to a point where you're generating income that's passive and mobile, completely passive and mobile. And the only way you can generate, one of the best ways you can generate passive mobile income that's actually, in a sense, has a very high likelihood of coming true, is to take now, so whenever income comes in that exceeds over that $30,000, you build up a $30,000 cash cushion. Anything that exceeds that or goes above that, you now go and put into your investments, your long-term investments. And you notice how trading I've put into the business and income. I personally see trading as a way to generate income, even if you're managing prop firms. And by the way, the moment you start managing prop firms, you go from a zero sum to a positive sum. But you're managing prop firms or private investment, that's income, that's business that you're generating income. Then when the money comes into your bank account, the way you manage that isn't through trading. The way you manage that is through long-term investments, income producing assets, like a low-cost index fund, for example. You go and buy a low-cost index fund that goes diversified into the S&P 500, the total market, and now you're investing in all the best companies in the world that has the best management teams in the world that are selling the best products in the world to consumers who absolutely love those products, and you're getting a piece of that cake. You're generating income in the form of a dividend from that. Okay? So my suggestion is whatever money you have in your personal finance is then invested into the best, the best of the best out there. And you keep your trading for income purposes. And you continue to scale through prop firms for income purposes. And then, part of your expenses, you may have a part of the expenses, which is trading prop firms accounts, right? And challenge accounts. And you continue to reinvest into challenge accounts to build your overall nest egg of prop firms. That's smart to do as well. Okay? But after you have that cash cushion, whatever exceeds that cash cushion, a portion of that now gets invested into long-term income producing assets, and you reinvest the dividends. Now, there will come a point in 10, 20, 30 plus years, maybe even closer to 40, 50 years, where because of compound interest that's been compounding, and some may think, it's only making me 7% a year, but then you add the dividends reinvested on top of that, and then you add compound interest on top of that, it becomes a significant wealth creation vehicle towards the later ends of the 40 to 50 years. Yes, 40 to 50 years may take some time, but that becomes a very powerful wealth creation system that runs in the background. You don't even think about this. It's just the whole process becomes automated. And all you focus on is continuing to make more money through your trading, through your job, through your business, continuing to serve more and more people, continue to scale up with prop firms to generate more and more income. And this here is all automated. Savings, investments, automatically buys the income producing asset, and that's how it becomes passive, mobile, and then eventually you'll come to a point where you no longer want to work, or you no longer can work because of a sickness, because of something a little bit more serious, medical issues, and that's where you no longer reinvest the dividends, but you live off the dividends, and they now cover your expenses. And now you have true passive mobile income in the form of a dividend yield from a stock or an index fund that you own that's covering your expenses. And yes, this may take some time. It may take 30 years to build, but that all runs in the background, and you're only putting a small portion of your overall income in there, and it's something you forget about and you completely automate, and that grows over time. Okay? And then over time you can force the amount of savings, you can increase your savings so that you have accountability to increase your income. And when you increase your savings, you increase your investments, and you're forced to increase your income. You're forced to scale your prop firms or serve more clients and customers through your business. And this to me is a sustainable, foolproof methodology to making more and more money as a trader, and doing it in a way that covers and has been aware of and addressed and covers some of the risks that you're going to face as a trader, either currently or in the future. Okay? So we've covered all the risks I've written here, but this overall wealth creation system, it covers a lot of risks that I haven't even mentioned. All right? Now, if you found this useful, make sure you share this video and all the videos in this Trading Psychology Mastery series with your trading communities. Let's get this out there so more traders can focus on working on their trading psychology. And if you haven't already, make sure you check out the Trading Psychology Archetype Quiz. That quiz is a game changer in terms of what information it's going to share with you on what mindset you have. And check out the resources in the description. Both those things are in the description. And I want to thank each and every single one of you for watching the Trading Psychology series. I know I've been getting a lot of great messages saying you guys have loved it, got an enormous amount of value from it. So if you've resonated with this series, make sure you also check out the 12-week program. That's just an absolute game changer in terms of the tools, the coaching, the education, and get in there. It's just the next level on top of this YouTube channel. All right. And it's been fun making these videos every day. In the next few videos on this channel, I've got a great interview that's coming out with a trader. I've also got some more titans of trading videos that I'm working on to share with you the mindsets of the biggest and best traders out there in the world, which I know you guys are going to get an enormous amount of value from. There's been some great feedback on the Paul Tudor Jones one that was put out a few months ago. Okay, I'm going to wrap up here. Thank you for watching to the end, and I look forward to seeing you all in the next video I put out.